Hi, my name's Brandon. I'm back with another chapter summary for Business Law 2 class. These two chapters are chapter 36 and 37. Uh, First, chapter 36, that is about small businesses and franchises. So first, like general considerations for small businesses, there are some requirements like business must have their name registered. There's occupational licensing, state tax registration, and many like zones and permits for buildings and stuff like that that need to be done. Um, Small businesses must could also have like protecting their intellectual rights, like we talked before in the other chapters about trademarks and stuff like that. Um, and then some different types of small businesses. One of the most popular ones I'd say in the United States is sole proprietorship. Basically, that is it's just a business. It's a pass through business only. Like for like example, the advantage to that, like taxes, like all the money just flows through to you. It doesn't stay. The business doesn't get taxed, so you're only taxed personally. And there's a lot of flexibility in that, and like some disadvantage. That's a big advantage. Some disadvantages to that are like many of your personal assets are at risk, and you could also be limited to raise capital if you're going to try and grow too. Um, there's also another type of sole proprietors like franchises. See this a lot of fast food, automobile makers, soft drinks, like pop and stuff like that. So like there's distributorships, and that's like automobile. There's chain style, and that's more fast food, where they sell you chain. And then there's manufacturing arrangement, and that's more like the Pepsi Cola type thing. Um, there are laws with that, like federal regulation. They have industry specific standards. Like an example, automobile makers can't make unreasonable demands to I suppose, their franchisees. There's a franchise rule, and that is franchisors must disclose certain material facts that franchisee needs to make decisions like with profits and stuff like that and expenses like whether so they can make the right decisions for the franchise. With like a franchise contract, there's like the payment for the franchise, business premises, location, quality control, everything like that. And in the contract, franchise termination should that's where it should be in the contract. That's basically chapter 36. Chapter 37 deals with all forms of partnerships. This is very popular in the United States too. Some like like the definition of a basic partnership is just when two or more persons come together, they're co-owners with a business for profit. Uh, the essential elements of that are that they share profit and losses. Tax treatment is also a pass-through entity like a sole proprietor. So it's all only taxed on the owners, basically, not like a corporation where the corporation is actually taxed. So like the formation operation, first there are articles of partnership, and there are rights to the partners, such as management rights, compensation, inspection of the books, property rights, stuff like that. Authority of partners and liability of partners. Liability is a big one with partners. Um, so with like disassociation, termination, this is like ending a partnership, which partnerships do. Some events that could happen, you could be voted out. There could be a significant event, like one partner dies, or like another person may just want out. They may express their will to withdraw. Um, some effects of that, like their rights and duties changes. There might have to be some buyouts to the other partner might have to buy out the other. And big thing is with like liability of third parties because all businesses borrow money, so you definitely have to notify the creditors, and that's going to have to be arranged too. A type of partnership, the first one is a limited liability partnership. That is when it's also a pass through entity. Individuals only taxed, but there is limited liability on the partner. So in a lawsuit, you can't go after the partner's personal stuff, just whatever he has in the business. There's also just the limited partnership. That is when there's one general partner, one limited partner, when one person's in charge, and then that's a general partner, and the other person's there to just finance more like. And you need a certificate of limited partnership too. So that's chapter 36 and 37.